Hi friends, so let's start with today's analysis. I think a decent day for the markets. There should not be any complaint from the markets with the price action today. Although we saw some kind of gains being given up from the higher levels, we touched at around 22,869 kind of levels on Nifty today, and we probably gave around 100 plus points during the intraday. But still, I would believe that the day was good, at least for the markets. There are a few reasons to it. We'll discuss in the further analysis about it also. So, uh, ultimately, we told that this is the range where you need to book some profits. 23,800 to 24,000 is the range where you should become lighter in terms of your lots or your quantities, whatever you're dealing with. It will depend on how much risk you can take and what are the markets actually pricing from here on. So markets can surprise. It's not that market can't surprise. So and only the riskier traders should take positions from here on with a very strict stop loss. And I would recommend that the stop loss can be around 23, 500, 550 or that kind of ranges because a lot of put writing yesterday has happened on 23, 500. If that level gets broken, probably we are done with a some kind of a relief rally which is played out and probably we'll try to consolidate. But the important thing is, can we fall very sharply from here? Answer looks like no. Although we would wait and see because the big event is coming up on 2nd April. So the persons who want to still carry on with the markets and want to trade this market, they should have a strict stop loss, or you reduce your quantities with whatever risk you can take, or you hedge your positions uh, uh, in the way you are comfortable. So these are the three approaches that you can follow. I have yesterday also told that I reduced my positions and probably I've reduced the positions today also. I'll be going very lighter now with the stop loss. Probably I take hedges also. So individual to individual strategy can differ. Some can go with the stop loss with full quantity. Some can go stop loss with lesser quantity. Some can go with the hedge and take higher quantity. Some can take hedge and take a lower quantity. It depends on person to person. Uh, how much risk he can take. And why I'm saying this particular level is important because these are levels where we actually started our selling from the budget or let's say RBI rate cut levels 23,807. We crossed today in intraday, of course, but it could not sustain. But in spite of that non-sustenance, and we have discussed that 23,800 and 24,000 will be the levels for where market will take a small rest, and it should take some rest here because we've seen a one side way movement around 15 and 1600 points, and it's always healthy for markets to take some break, consolidation, let some profit booking come in, let some hands be exchanged. The persons who have taken positions from bottom levels, let them book some profits. Like new people who now believe in the theory that probably we are heading for a bigger rally from here on, those should enter the markets. That's a healthy sign for the markets. It's always healthy for the markets to behave in this way. So again, as a trading position and according to risk profile, you can take your positions. But I would still feel that 2nd April is an event which actually we should look beyond it. Which I what I mean is that probably we should be aggressive in the markets only after 2nd April now. I know things are getting solved and things are becoming easier and easier as the dates coming closer, but still there's a lot of uncertainty. And I'll give you reasons why there's uncertainty. But I'll give you one small reason why I still feel markets were good because even after doing that 6 day, 7 day continuous rally, market did not sink at all. Yes, we lost some points intraday, but we're still trading in green and pretty healthy. We were around 23,700 plus for most of the time. We went for some time in red, but most of the time we saw buying. So there are supports being made at 23,500, 23,600 at that kind of level. So probably that will not allow the market to sink. This is what I told yesterday also. Whatever will happen, it will happen on the screen. You'll get a chance to exit your positions or enter your positions. No gap up and no gap down will sustain here. It is very difficult for now the gap ups and gap ups to sustain. The texture ऐसा बन गया मार्केट का कि यहाँ पे दोनों चीजें पॉसिबल नहीं है. You will get your entry points or exit points intraday on screen. The texture is like that of the markets. But the important news came that US and so yesterday we had a good session in US, by the way. When we were closing our markets, Dow futures were up around 30 points and Dow futures were Nasdaq futures were up by around 200 points. But on the better side, Dow actually closed around 600 points up, and Nasdaq had a beautiful rally of around 200, 400 points plus. So we had a good session on US market yesterday with a statement which came from Trump office that they will not put all the tariffs in one go. There will be some relaxations for some countries and some products as well. With that, market was slightly happier, and Tesla, I think that stock went more than 10%, and uh, most of the stocks were in green yesterday, and that actually rallied the US markets. But the Asian markets were not doing so good in spite of the US market rally. It was pretty subdued. We didn't see a big rally. Nikkei was starting, it was up around 1.2, 1.3%, but again gave up the gains. Again, it tried to climb, but it was steady. We didn't see a big rally in Japanese markets or South Korean markets, or for that matter, Asian markets. India, yes, we had a temporary rally, but again, it got punctured and we were moving pretty flat. And that could be a movement of expiry also. We don't know, but tomorrow we'll get the real picture out of it. Now, India again, the talks are going on with India and US to reach to a deal between US and India in terms of their bilateral talks, and they're looking for a larger trade deal with the two countries for longer time horizon as well. So, what is the news which is coming from the writers from the Informist is that $66 billion is the trade between India and US, and India would be reducing the tariffs on 55% of the products which US is exporting to India in the first round. So on that first round, the meeting is going on, the negotiations are going on, and it is estimated that the tariffs will be cut by around 5 to 30% depending on the products. So India has agreed to a larger part of what US is saying in the first go, the first round. Second round might happen again, and US and India probably, I don't know what is the stand of India, but that meeting is scheduled to be happening later. But first round probably would be concluded in these 3 days of meeting which US and India are doing right now. Now, this is what Trump wanted. He wanted countries to kneel on their knees and to reduce the tariffs. So now again, the theory which said that you make USA great again is again slowly again coming up. The reason I'll tell you why. So first of all, dollar index. Yesterday we saw dollar index touching 104, but when we were making the video, it was around 103.8. Today's crossed 104.5 and inching towards 105. Yesterday also I told if dollar index crosses beyond 105, it will not be a good news for India again. Although our rupee is stronger, today we are around 15-20% lower, but still we are pretty steady in terms of 85.7 or that kind of a range. But if dollar index start moving upwards again, it will create pressure on the equity markets around the world. It will not be an easy ride for the equities to perform good if the dollar index is higher. And that is probably happening once again. So that is giving you one hint that the flow of money is again happening towards US. And I'll give you the reason why. Most of the countries are not in a mood to fight with US. So India has reduced their tariffs on 55% of the products, or they're in talks. This is the first round, mind you. It's not the end. We are not keeping wheat, maize, and other some dairy products and other agriculture products into this category. Probably that discussion will happen later in second round. I don't know when it will happen. But India at least started the reduction of tariffs straight away. European Union has told last week that they will not put any counter tariffs on US at least till 15th of April. Mexico has not put any counter tariffs anyways right from day the US has announced tariffs on them at all. Canada also very light tariffs and which were taken back again. They're not in mood to fight with US. I don't think Japan will have any reason whatsoever to fight with US. They will not do that. Yesterday again the news came that Trump has announced that the person who are buying oil from Venezuela, they'll be charged 25% tariff. Now the biggest importer of oil from Venezuela is China. So America is attacking China to a larger extent. India is also buying crude from Venezuela, but we are in less quantity and we can easily give up that thing. But that's the kind of attack he's doing. So European Union is deferred, India has agreed, Canada, Mexico is not doing anything, Canada very light tariffs, Japan is in no mood to fight. Then who else will fight? It's the war will become between US and China. And that is what it was always meant to be. The entire uh, doldrums of Trump tariffs was actually always attack China only. All these other countries are just a scapegoat. We have no, trade volumes as such whatsoever, and probably Vietnam. and other countries which he wants to target who are actually exporting products to America which are produced by China or the factories are in those particular countries. So the attack is directly on China, and that is the reason why America is fighting hard to stop the war between Russia and Ukraine, because they believe that Europe, Russia, and all these countries should be together against China. That is the theme, or that is the logic, or that is the mantra on which Mr. Trump is working. Now, with this logic, if the people are not putting any counter tariffs on US, then all those stories where we were expecting कि US में सामान महंगा हो जाएगा, inflation will be higher, their growth will become slow, all this is vanished. Again, actually, it become positive for US markets now, because if the tariffs are getting reduced, which means the companies become more competitive, there will be trade realignments, and US companies will gain out of it. Even US country will, as a whole, will gain out of it. That, according to me, is another big shift now which can happen in next 10-15 days. And I'm seeing early fruits, or let's say I'm seeing the early hints for it. Yes, I'm the first one to talk about all these things. And today's Nifty IT is also giving you some kind of indication. I always told you, don't sell Nifty IT. Nifty IT is not in a mood to go down from here. The FIs are buying Nifty IT stocks once again, and that is making that anti index even more lucrative from here on. Today, again, there was a report from CLSA which has upgraded many of the IT stocks to buy. Although I don't believe in CLSA a lot because I don't like their research too much, but this is what that brokerage is saying. I also believe that if American countries start becoming great again, or if US wants to gain out of this tariff war, then I think Indian IT companies should do good. One sector which will remain unaffected from US Trump policies, tariff policies, will again be Nifty IT. Of course, other things also like Nifty Bank, all it. But Nifty Bank has traveled a lot. It has traveled around 8% in last 1 week or 10 days. Even Nifty, even so, this is the beaten down sector where you can enter right now. If you believe in what I'm saying, and my firm belief is I'm not seeing a big resistance from any of the bigger countries except for China, who is also not done anything big on the or anything big on the tariff on US. I think most of the countries will actually go down in front of US, and US will gain from here, which means dollar index will start inching again forwards, upwards, and put pressure on currencies. We might see a currency war again, and all those things which we were worrying might start happening even when Trump is not putting tariffs in start one go. Even if he's putting in a staggered manner, which he's saying, still I would feel that probably it might become slightly positive for US. US as of now was falling when the Trump was announcing tariff, because people were expecting that there'll be counter tariffs on US and that will slow down their entire thing. But in a shorter term, that is not looking like it is happening, which means that uh, and there's a meeting going on between European Union and US as well. So most of the countries wants to find solution with US. They don't want to fight. According to me, US markets probably should look higher from here on, and Nifty IT should perform good. How will Indian markets do in that scenario? See, now it depends. What are the sectors which will be hit out of this tariff? What are the announcements? And how much of currency war will China do it? And how much India will respond to it? Uh, will FIs be interested in still coming to India because if they find some good deals in US? Those are things to be seen, and we cannot be too fast and too quick to anticipate all these things. So it's a bigger event. We don't know what will happen. So probably this is my view that we should wait for 2nd April. But the the counter logic has started today that US markets probably has it's looking like they've bottomed out. Dollar index for the time being is looking like it has bottomed out at 102.9 or 8 something, and probably we'll start seeing some kind of dollar movement once again. And if not even dollar, we'll see that currency war and probably that kind of a fierce tariff war between US and China. I think that should now grow wilder from here with the way he's targeting China. So this is one important part on our overall thing. FIs have taken good positions in FNO, and they've been a lot of put writing as well, which I think will not allow our markets to sink. It will keep our markets floated. And I would not assume, or I would not think, or in my analysis, I don't assume that you will see a big sell off from India now. So because the trade war between India and US is very small, anyways, we are finding a solution. Yes, there'll be some goods, there will be some companies, some sectors, but those are not in Nifty. Nifty companies are very less exposure to this kind of tariff war. There are some pharma companies, some auto companies, that's it. The exposure is very less. Pharma ka sector ka anyways, Nifty contribution is very less. Even autos is not that much. So I don't think that Nifty or Bank Nifty should get affected too much out of it, but we might have a broader index pain. Small cap and mid cap might see that pain depending on how the tariffs Indian government is reducing for US. So for me, we should sit aside and wait for things to happen. But at the same time, for riskier trader, you can do your trade because I don't see a big downfall also. That is what it's looking as of now. Now, rupee is becoming stable, so rupee is not a concern at all. Crude again has started inching upward because that yesterday's Venezuela news. So the crude is now $73 up. At one point of time, it was trading below $70, so it's already moved up by $3. But if the trade war begin between US and China, I don't think crude can reach to a very high levels, and even Trump wants US crude to remain lower, which means that crude should not become a risk to us as such going forward. The only smaller risk which I'm seeing is dollar index, nothing more than that. That also I don't think it should reach to 110 levels or those kind of things, but it can breach 105 once again. It's looking like that. Now, coming to our markets further, so let us understand. Yesterday also I spoke in detail that which sectors and how much is the trade quantity between India and US in terms of tariffs. But apart from slightly, I would say Nifty Pharma and Nifty Auto, I think all the other indices should look good from here on. But the problem is that what is the trigger for the markets to move upward from here? We don't have any RBI policy right now. That is welcoming first week of April. We don't have earnings. GDP number is not there. Inflation number is not there. So there is no trigger as such for markets to move on. Plus, there's a big event which is standing right in front of us on 2nd April. Now, there are not many trading days left out of it. So, 29, 30, 31st, we have holidays. Monday's holiday because of Eid. Today we are on 25th. Anyways, 25th is gone. So 26, 27, 28, we'll have 3 trading sessions. After that, again, we have 3 days holidays and then we have an event. So market should remain sideways from here on. I don't think we should have a big rally because we have not got a very big hint for our earnings and our domestic GDP performance. With those numbers not being there, market should not go too high from here on. That is what it's looking like. But if the market has got the news and the market uh, has got the sniff that the economy is looking much, much stronger, and we might see some very good numbers from companies this quarter and next quarter to come in, then you may see a rally going upwards. That will surprise everybody because I don't think many people will be able to participate in that rally. Anyways, people have not participated in 2200 to 24,000, not less 23,800. This rally which has happened because most of the people believe that Nifty will only perform in second half of the year. Nifty is going to 21,000, 19,000. All those kind of levels were coming on. It was all still a sell on the economic market. So people have missed that rally again. And if at all market moves from 24,000, 2,500, 25,000, which I think market will only know the greater insights, then I think most of the people again miss this rally because people don't want to take risk now by being in the markets and play for that rally. Uh, yes, some risky traders will do it. It's not that they will not do it, but we have a bigger event of taking Apple because I think people should wait, and I think FIs should also wait. This is my feeling. Even if they had a good news in their mind, still I don't think they will risk themselves to buy so much in quantity and take the Nifty to 24,500, 25,000 on that level because earnings will improve. But will the earnings drastically improve? There's a doubt. And we are still not, now again, we are not cheaper. So we have rallied around 5-6%. On Bank Nifty, we rallied around 8%. So now we're not that cheap. The trade which played out between 22,200 and 23,800 was that people were getting worried on counter tariffs on US as well. US got beaten down. China and Hong Kong, anyways, they had a rally which was played out. Dollar index started coming down because of that money offer from US. And India was available very cheap. India was available very cheap at 2200 or 22,000 kind of levels. And the bigger advantage for FIs was that they knew that the impact of US tariffs on India would be minimal. So these two things put combined, they thought that's the biggest opportunity. Let me take out my money from US and put it in India. And that is what exactly happened. And now they have made this Nifty to a fair or slightly, I would say, um, greater than fair value. Now we are not exactly at fair value. We are slightly higher. So we are slightly at a premium now. And for these levels and bigger levels to sustain, we want earnings. Beyond that, if the market even goes, it will not sustain. For that, we don't have a data. So that is why combined I'm saying that the levels to wait, watch, and let the market settle down, take their view, and then probably trade. Nothing happens even if you buy on 24,500 when you have all things in your place. When you know that the GDP started coming up, you know the GDP, the reported numbers are going up, earnings are rebounding, and the tariff war is behind us. Even if you take in 25,000, you'll not be a loser because markets will go much beyond that. Market will go 26,000, 27,000 eventually, if at all those things are settling down. But if you take a gamble from here that things will not happen without knowing or without the incident to actually pan out, then it's a setup. And then it can happen both ways. So if you believe in those things, do it. If you have stop losses, if you believe on uh, your hedging part, then you can do that. I'm not denying those facts. But it's the risk reward is not good. The risk reward on these levels are not good. Risk was very good at 22,800, 22,500, 22,200. At that point of time, risk reward was very good. And we saw the early signs of the important parameters turning into the favor of India. Right. Now, probably some of the parameters are still benign, they're still good, but we have a big event and we have rallied. So now, Kotak Bank is trading at all time high. HDFC Bank is very close to all time high. ICICI Bank yesterday was 52-week high. So many stocks of banking stocks have also started reaching to their highs, which means that some kind of a rally has already happened. Now it's not a beaten down rally. So now we want triggers, now we want events, now we want a much clearer path to travel forward. And that's why I am very light now in these markets, and I'll be happy to sit on one side and wait for things to unfold till 2nd April, 3rd April, then take my view going forward. Of course, market is opening every day. We are getting the sniff of the markets every day. So it's not that market is going anywhere. Markets are still to sustain, still to remain here. And if at all we feel that things are changing, you can again enter the markets. Market will give you an entry point and exit point almost daily. So you don't have to worry about that. Nothing will happen that you will have a big gap up. Even if it happens, it will still come to take you. So you're not worrying on that. So my overall view would be that stay cautious and wait till 2nd April for things to unfold. But who are risky traders, since we don't see a bigger downside also, you can take your risk and take your trades and go forward. That is entirely on a person to person risk taking profile. So this was the analysis for today. With this, I end my video. I'll not be available for next 3-4 days because I'm going outside. I'm out of station. But a very important part is there. I'll probably post a link or make a short video. Otherwise, we meet probably on Monday. Thank you. Thank you for your time.